Something quietly shifted inside the Social Security system this April, and most people collecting benefits have absolutely no idea it happened. The Social Security Administration just updated its payment schedule, and depending on your birthday and benefit type, you could be receiving not one, not two, but 3 separate deposits hitting your bank account this month alone. On top of that, the COLA adjustment that took effect earlier this year is finally showing its full impact in April's payment cycle, meaning your check amount may look different than what you've been receiving for months. But here's what's really important. Thousands of seniors across the country are waking up, checking their accounts, and getting confused because the dates have shifted, the amounts look unfamiliar, and nobody at SSA sent them a clear explanation. That confusion stops right here. In the next few minutes, you're going to see the exact April 2025 payment dates, understand why 3 checks are possible, and get a clear breakdown of how the COLA update directly affects your monthly deposit. No government jargon, no runaround, just the straight facts you deserve. So let's start from the very beginning, because before we get into the 3 checks and the new schedule, you need to understand why April is different from every other month this year. The Social Security Administration operates on what they call a staggered payment schedule, and that schedule is built around your date of birth. This isn't new. SSA has been doing this for decades. But what is new is how April's calendar falls, and the way the COLA adjustment is interacting with that calendar to create a situation that genuinely looks unusual to millions of beneficiaries right now. So if you looked at your bank statement this month and thought something was off, you weren't wrong to notice. Something is different. The question is whether it's different in a good way or whether there's something you need to act on. And that's exactly what we're going to figure out together right now. Let's talk about the payment schedule first, because this is the foundation of everything. Social Security retirement and disability payments, meaning SSDI, go out based on a birthday system. If your birthday falls on the 1st through the 10th of any month, you get paid on the 2nd Wednesday of the month. If your birthday falls between the 11th and the 20th, your payment comes on the 3rd Wednesday. And if your birthday is between the 21st and the 31st, you're in the last group, and your money arrives on the 4th Wednesday of the month. Now, this system works smoothly most of the time, and most months you just get your one payment on your Wednesday, and that's that. But April 2025 is not most months. Because of how the calendar is laid out this year, April has 5 Wednesdays in it, and when you have 5 Wednesdays in a single month, the spacing between payments from March and April and even into early May starts to compress and overlap in ways that can make it look like extra money is showing up. For some people, that's exactly what's happening. For others, it's about timing and perception. Either way, you need to know what's yours and what's expected. Now here is where the 3 checks conversation really begins. And this part is important, so stay with me. If you receive both Social Security retirement benefits and Supplemental Security Income, what most people call SSI, then you are already in a category where multiple deposits in a single month are completely normal and expected. SSI payments go out on the 1st of every month, while your retirement benefit follows the Wednesday birthday schedule. So in a regular month, you'd already be getting 2 separate deposits. But April adds another layer to this. Because April 1st falls on a Tuesday this year, SSI payments that would normally go out on April 1st were actually sent early, at the end of March. That means some recipients saw what felt like an extra deposit in late March, followed by their regular retirement check in April. When you add in the possibility of a makeup or catch-up payment for anyone who had a processing delay or administrative correction applied to their account, suddenly you have a scenario where 3 deposits in a very short window are entirely possible and completely legitimate, and this is where a lot of seniors get understandably anxious. Because when you've been receiving the same amount on the same day for years, and suddenly your bank app shows 3 different deposits from the Treasury, your first instinct is to call SSA or go online and try to figure out what happened. The problem is that SSA's phone lines are overwhelmed right now. Wait times are running long, the automated systems are confusing, and a lot of people are hanging up without getting real answers. So let's be the answer. If you receive 3 deposits this month and you receive both SSI and retirement benefits, that is almost certainly normal. If you receive 3 deposits and you only receive one type of benefit, then one of those payments may be a retroactive correction, a delayed payment from a previous month, or in rare cases, an overpayment that SSA will eventually want back. That last scenario is the one you want to be careful about, and we'll come back to that in just a moment. But first, let's talk about COLA. because the cost of living adjustment is the other major piece of this April story, and it deserves its own full explanation. Every year, SSA adjusts benefit amounts based on inflation data, specifically the Consumer Price Index for urban wage earners and clerical workers, which is called the CPIW. The 2025 COLA came in at 2.5%. Now, some people saw that number and felt disappointed, especially compared to the 8.7% adjustment back in 2023, which was the highest in 4 decades. But here's the context that matters. A 2.5% adjustment on today's benefit amounts still translates to real dollars. For someone receiving the average retirement benefit of around $1,127 per month, a 2.5% increase adds roughly $48 a month. That's over $570 in additional income across a full year. It's not life-changing money, but it is real money, and it is money you are entitled to. What's interesting about April specifically is that a portion of beneficiaries are seeing their adjusted amounts reflected clearly for the first time this month. Some people received their January payment and thought the COLA increase looked smaller than expected. That's because Medicare Part B premiums also went up at the start of the year, and for people who have their Medicare premium deducted directly from their Social Security check, the COLA increase and the premium increase partially offset each other. The standard Medicare Part B premium for 2025 went up to $185 per month, which is an increase of about $130 compared to last year. So while your gross benefit went up by roughly $48 if you're near the average, your net deposit after Medicare deduction went up by closer to $38. That difference confused a lot of people in January and February, and some of them are still trying to reconcile those numbers now in April. Here is something that not many people are talking about, but absolutely should be. If you turned 62 in 2025 and you are just now making decisions about when to claim Social Security, the COLA situation should be part of your thinking. Every year you delay claiming your benefit, you earn what are called delayed retirement credits. Your benefit grows by approximately 8% for every year you wait past your full retirement age up until age 70. Now pair that with annual COLA adjustments, and you can see why claiming later, if your health and finances allow it, can result in significantly higher lifetime income. A higher base benefit means every future COLA increase is calculated on a larger number. That compounding effect over 20 or 25 years of retirement can add up to tens of thousands of dollars. This is not a sales pitch for waiting. For many people, claiming early makes complete sense, but it is information you deserve to have, so the decision is actually yours to make. Now let's circle back to that concern about overpayments, because this is genuinely something to be aware of right now. SSA has been dealing with a significant backlog of overpayment cases, and in recent years they have been more aggressive about recovering money that was paid out incorrectly. An overpayment can happen for a lot of reasons that are not your fault. SSA might have had incorrect income information on file. There might have been a processing delay that caused duplicate payments. A life change like a marriage, a move, or a change in work status might not have been reflected in their system on time. If SSA determines that you were overpaid, they are required to send you a notice before they take any action. That notice will come in the mail, and it will explain the amount they believe was overpaid and give you options. You have the right to appeal. You have the right to request a waiver if repayment would cause you financial hardship. You do not have to simply hand the money back without asking questions. If you receive one of these notices, take it seriously, but do not panic. You have rights in this process, and there are steps you can take. Let's also talk for a minute about the seniors who are not yet receiving Social Security but are getting close. If you're in your late 50s or early 60s, and you've been watching these payment changes and COLA updates and wondering how all of this applies to you, the most important thing you can do right now is create or log into your My Social Security account at ssa.gov. That account will show you your full earnings history, your estimated benefit at different claiming ages, and any flags or issues on your record that might need to be corrected before you claim. Earnings record errors are more common than you'd think. SSA relies on employer-reported data, and sometimes jobs from years ago, especially part-time work or self-employment, don't show up correctly. If your earnings history is wrong, your benefit estimate is wrong. And if you catch that error before you claim, fixing it is relatively straightforward. If you catch it years after the fact, it becomes much more complicated. This is one of those things where checking now, even if retirement feels far away, can make a meaningful difference later. For those of you who are already receiving benefits and want to make sure your April payment is correct, here's a simple way to check. Log into your My Social Security account and look at your benefit verification letter. This document shows your current monthly benefit amount before and after deductions. Compare that number to what actually hit your bank account. If there's a discrepancy of more than a few dollars, make note of it. Small differences are often explained by rounding or Medicare premium adjustments. Larger differences should be investigated. You can also call SSA directly at 1-800-772-1213. Yes, the wait times are frustrating. Yes, the system can feel impersonal and confusing. But if there is a real discrepancy in your payment, it is worth the time to get it resolved. SSA does make mistakes, and those mistakes don't fix themselves. Something else worth knowing about April is that it falls during a period when SSA is also processing a significant number of new claims filed at the start of the year. January and February tend to be peak months for new Social Security applications, especially from people who turned 62 the previous year or who hit their full retirement age and decided to start collecting. When the volume of new claims is high, processing times slow down across the board, and that can occasionally affect payment timing, even for existing beneficiaries. If your April payment came a day or two later than usual, and you can't find any other explanation, this is likely why. It does not mean something is wrong with your account. It means the system is under strain, which is unfortunately a chronic condition at SSA right now, given budget pressures and staffing challenges that have been building for several years. On the topic of SSA staffing and service, this is something seniors across the country feel very deeply. Field offices that used to be accessible have had their hours reduced. Phone wait times have stretched to over an hour in many cases. Online services have improved but are not accessible or comfortable for everyone. If you are someone who prefers to handle your Social Security business in person and your local office has limited hours, it is worth calling ahead to make an appointment rather than walking in and waiting. Appointments are given priority over walk-ins, and having one can save you hours of your day. This is practical advice that sounds small but genuinely matters when you're dealing with something as important as your monthly income. Before we move toward wrapping up, let's take a moment to talk about what's coming next. The Social Security trustees release their annual report each spring, and that report gives us a long-range picture of the program's financial health. The most recent projections suggest that the Social Security Trust Fund, if Congress takes no action, could face depletion sometime in the mid-2030s. If that happened without any legislative fix, benefits could be automatically reduced to about 83% of their scheduled amount. That sounds alarming, and it should be taken seriously. But it is also important to understand that Congress has intervened every single time the program has faced a funding crisis in the past. Social Security is the most politically protected program in the federal budget because of exactly who depends on it. Significant cuts to current beneficiaries are considered almost unthinkable by most lawmakers on both sides of the aisle. What is more likely is some combination of adjustments to the payroll tax, changes to the benefit formula for future claimants, or modifications to the full retirement age for younger workers. If you are already receiving benefits today, your checks are not going to suddenly stop. But staying informed about these long-term conversations matters because they shape the political will to protect the program. What April 2025 really represents when you step back and look at the full picture is a Social Security system that is doing its job while also showing its seams. Payments are going out, COLA adjustments are being applied, millions of Americans are receiving the income they earned over decades of hard work. At the same time, the schedule confusion, the overpayment concerns, the Medicare deduction math, and the long-term funding questions are all real, and they all deserve honest conversation. You are not wrong to ask questions. You are not paranoid for double-checking your deposits. You are not being difficult when you want a straight answer about your own money. These are reasonable expectations, and you are absolutely entitled to meet them.